the psychology webinar that we did last week about your own psychology, when you take winners and you take losers and things like that. When we talk about market psychology, guys, we are talking about sentiment. Now, sentiment is a huge common sense approach to trading the markets, which again, we preach a lot in our classes, and we explain exactly what we mean by sentiment. Now, there's option sentiment, meaning how, options are priced because of what the underlying equity is doing or how much time is left until expiration, and then we talk about market sentiment, okay? Now, real quick, just to throw it out there, for some of you guys who might understand what I'm talking about, what do you think the underlying market sentiment is in this market? And just go ahead and throw it in the question box. I mean, what do you guys think is going on in the markets right now? What do you think the underlying sentiment is? Now, Dustin here is saying bullish. Igor is saying buy everything. Sebastian is saying bullish. Anmol here is saying uncertainty. Sam is saying bullish. We got G is saying fear of being left out. Vishal is saying BTFD, which for all you, all you kids these days who gotta, you gotta give abbreviations for shit. That means buy the fucking dip. And Becky is saying sideways. Joe Bear, Benji, who ironically has a similar last name to me, my man, is saying uncertainty. So, I mean, there you have it right here. So these all comprise your market sentiment, but it's not like there is a there is a definite way of going about this. You need to understand where your strategy lies in terms of what the sentiment is going on. And luckily today is a perfect example of market sentiment. Now, most of you guys pull up your news wires in the morning, and what did you guys see this morning? What did you guys see this morning? All you saw plastered on every single web or every single major website was what? All you saw was GDP from the Eurozone was pure shit, right? Came in below expectations. And then what was the market's reaction to that, to those figures, to those GDP numbers from Spain, Italy, and all that kind of stuff? So you take a look at what happened in the pre-markets for the indexes. And as soon as these numbers came out, what happened? We went from 152.10 on the SPY, and again, you can use your S&P 500 or whatever. And look at this big tank job, right? And then all of a sudden you wake up in the morning, right, and you see all the headlines plastered with Eurozone troubles again. And I'd like to bring up what happened here. What happened here that day? And this was on this was a couple days ago. This was on February 7th of last week. What was the news here? Actually, it was this day right here. It was this day right here, February 4th. What was the news here? Spain and Italy, out of nowhere, was on every single news wire and saying, okay, Spain and Italy is in the shitter once again, okay? And then what happened the next 2 days? Nobody said anything about the Eurozone. Nobody said a word about Spain and Italy. You didn't see anything plastered on any news wire anywhere, okay? It was just that one freak day where everybody just said Spain and Italy, and on CNBC all you heard was Spain and Italy, and then the next day, boom, we were right back to fresh highs like nothing freaking happened, okay? And the same kind of concept happened today, happened this morning. We get GDP news, everything came in worse. Supposedly, Eurozone is still in risk of recession, blah, 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 all that kind of stuff. And then lo and behold, what happens off the open? We sell off a little bit off the open, and then boom, just go right back to almost the 52-week highs for the market, okay? Now, this is a perfect example of market psychology. Now, I take all these people that are on Twitter or everywhere saying, okay, we got to get short. The market is overextended. Things have gone too far too quickly. All that stuff means absolutely nothing, guys. And then oftentimes and again, I can't prove this. I cannot prove this, but oftentimes the headlines that you see and the reasons that all these, CNN or CNBC will will credit towards a market move on the downside or the upside. Oftentimes it doesn't spell out anything. It doesn't tell you anything, and it's there to, because again, they have to come up with a reason for it. Otherwise they can't put anything up here on the headline. So if the market is up, there's got to be a reason why. So, you know, here you will see market is up because of M&A activity. Because of M&A activity, or whatever the hell it is. Because, you know, Heinz got bought out by Berkshire. Whatever the hell it is, whatever they can make a correlation to, they will make a correlation to it, okay? And I still firmly believe that oftentimes they pull some of these articles out of their ass just to, you know, move the markets in one direction or the other. And again, I can't prove this. I can't prove this. All I can say is that why would we tank 150 points on the Dow because of Spain and Italy, and then a week later not give a shit about it and go right up to 52-week highs? You know, things just don't add up when you're looking at market headlines, okay? And oftentimes these headlines, they create this psychology with most of the retail environment. So you see this big sell-off in the morning, and you know, you see all that news, and you're thinking to yourself, holy crap, maybe it's the top of the market. Maybe it's the top. Maybe we should go ahead and short this. So what do you do right off the open? You go ahead and short this, and then boom. If you're not looking at your sectors, and again, we're going to talk about this in a second, if you're not looking at the reaction to other stocks, if you're not looking at, you know, the underlying sentiment of the market, the underlying psychology, you are going to end up making a shitty decision and react entirely too late, you know, because of that bias, because of that sentiment. Okay, so market psychology from the market manipulator's perspective, from the smart money's perspective, from you know, from the institutional perspective, it's to get retail money to create a bias about a certain type of environment, and then capitalize on that bias. Okay, because again, retail money holds on to a bias until it's horribly late and it's too painful to you know, to stand through the fire, so to speak. Okay, and that is kind of the game about, you know, when you're talking about market psychology, market sentiment, and you're talking about bias. Okay, so that's what they're in the business for. So if everybody's out there saying, you know, market's topped out, you know, the people were saying market was topped out from here, okay, after the, you know, after the fiscal cliff was solved. People were saying, okay, market's come too far, let's go ahead and sell this. And you know what, we've kept going, and we've kept going until, you know, until now. And now let's talk about your sectors. So when you talk about market sentiment, you can't have a good picture of market sentiment until you scroll through all your sectors. So, you know, and again, this is why, you know, you take a look at some of our watch lists here. And let's pull this down. Then you take a look at this watch list right here. This is like a, you know, again, I'm on my laptop here, so I'm not getting the full, you know, the full breadth of my watch list here. But this is basically it. You got your, you know, you got a couple casinos here. You got a couple retailers. You got all the tech names. You got all the internet names. You got all the financials. You know, you got gold and silver in there. You got the treasuries. You got some of the credit cards in here. So this is basically, in the large cap world, again, if you're trading large caps, this is basically just a good watch list to have, just to scroll through your sectors. So you take a look at how, you know, each one of your sectors is reacting to the supposed weakness of the market. So you take a look at Goldman Sachs, and you see what she did right off the open. Okay, this thing is at 154. This was the high. Right off the open, she goes to 156. You're going to tell me this market is topped out if Goldman Sachs rips another 2 points? Come on. Come on. Okay? Come on. And again, this is how you roll through your sectors, and you understand sentiment to the point where it could avoid you making some mistakes, or it could get you to the point where you're avoiding hopping in too early to a trade that is again, that is bias motive. You are motivated by a particular bias. So again, I'm speaking to all the bears out there who want to short tops and who want to find the top of this market. It's not going to be that easy, guys. It is not going to be that easy. Okay, the market is going to basically just throw out all these negative reports to you, and you're going to want to short every single one of those reports, thinking that market is the top. And again, those dip buyers are going to come right back out. Okay, they're going to come right back out. And if you take a look at, let's take a look at Netflix. Take a look at Netflix off the open. boom, this thing sold off a decent amount, comes all the way back to about 190. We'll take a look at Google. This thing was pretty strong the whole damn day. This thing just didn't even look back. If you take a look at MasterCard and Visa, these two were extremely bullish as well. This thing just shot right up off the open and then got up here to 523. If you take a look at Visa, you're going to see the same thing. You take a look at some of the casinos, you take a look at the retailers. Again, they all put in very, very similar moves. This LVS is a little bit different here. She kind of sold off. But once you scroll through all your sectors, then you get a good idea of what the underlying market psychology is, okay? So hopefully now you guys are getting a good picture of understanding, okay, the sentiment that is underlying the market. If you have a bullish sentiment, if you have a bearish sentiment, if you have a total indecision, then you can adjust your trading strategies to capitalize on either or. So, for example, let's say most of you guys are saying, there's a lot of indecision. So a lot of you guys are saying bullish, but there's crazy indecision. And I understand what you're saying completely. So if you take a look at this Google or you take a look at some of these price lines, like if you look at this chart, like yes, it's bullish, but can you really make money off these things, especially from the options perspective? So, you're looking at all these stocks that are bullish. Notice they're all in these big consolidation ranges. You take a look at Apple, this is one of the biggest. Look at this nonsense. I mean, anybody who's trading this actually today or yesterday, honestly, I would bet you guys are losing money if you're trading this thing, because this is not an easy tape whatsoever to understand. If you take a look at this price line's even worse. This thing gapped below 700, and she's been able to hold over 700 for quite some time, gaps below, and then comes right back up here to 708 and change, okay? So again, these are some of the things that you need to be cognizant of, and you need to have a good understanding of market sentiment before you start making all these crazy day trades, especially if you're going to trade options. If you're going to trade options in a market that's bullish, but it's kind of weird bullish, you ain't going to make a dime. You're not going to make a dime unless the whole sector moves as a group, okay, which in which case happened in this Bank of America earlier on this week. So Bank of America, Citigroup, they all made explosive moves to the upside, and we all did very well because, again, this was a sector move, okay? So we were bullish, and the whole sector moved together, so it's easy money to make. Now, try being long for today or yesterday. Are you still going to make money, even though Goldman Sachs went up higher, 2 points? Are you going to make money in any other bank? Look at Citigroup today. This Citigroup was garbanzo today. I mean, yes, it was up a little bit, but very difficult to hold. You take a look at this JP Morgan, this thing was up. If you take a look at this Bank of America, this thing was horrible, okay? So all of them are now fragmented once again. And again, it's all about timing, okay? All about timing and market sentiment. You need to have a good idea on what the psychology underlying the market is. So therefore, you can hop into X, Y, and Z sector and possibly make the right, make a good decision here on whether you have a real breakout or you got some more bullshit. If the market is just choppy and, doesn't have a lot of conviction, you're going to have a tough time making money, especially in options. You're also going to have a tough time holding on to trades, okay? It's an environment where you can't hold on to trades. All right. Usually you get a breakout here on this Bank of America, and the next day you're going to get another move higher, and the next day you're going to get another move higher if this was really a very bullish market. But notice what you had. Anybody who held overnight here probably lost premium on their options, especially today as the stock did absolutely nothing. Okay? These are the things that you need to be aware of if you're going to make good decisions, especially playing options with a time expiration that is set to it. Okay, now another thing that we were going to briefly discuss was the algorithms. Okay, so now in certain types of environments, okay, and I want to say more so indecision. Okay, when you have a market that, let's say, has an underlying sentiment of bullish, but it's very indecisive, meaning people are bullish, but they're not, they're not bullish to the point where everybody is so aggressive. Like, for example, if you take the QE times. So if you go back to when QE3 was announced, this was back, I think September of last year. this is very aggressive bullishness. Okay, QE3 is announced, and everything just shot to the moon. So if you take a look at all your banks, or it doesn't matter what the hell you were in, Pricelines, the Googles, or whatever the hell it was, during that time, everything was very bullish. If you take a look at Apple and all that kind of stuff, you're going to see the same thing. And that's aggressive bullishness, okay? That's action where you can buy aggressively and you can hold the next day, and the day after that. But if you have bullishness that is kind of choppy and people are very indecisive about what's going to happen tomorrow, that's not going to help you out in terms of, buying a weekly call option or buying a monthly call option, okay? The prices are going to fluctuate a lot because you think of the sentiment now underlying everybody's, all their positions. They're very quick to let it go. Nobody's being really aggressive, so therefore your call option can't just go from $1 to $4 straight. It's going to go from $1 to $2, down to 75 cents, up to $1.25, back down to 50 cents, up to $3, down to $1.50, and then up to $5. So you got to ask yourself, are you going to hold through all of that? Do you have the stomach to hold through all of that? Is this the kind of environment that you really want to put the risk on for? These are the kinds of questions that you need to ask yourself constantly on a daily basis, okay? What is the market sentiment? What is my bias? What do they want me to do? And what is a real underlying trade? If you can't answer these questions, you shouldn't be in the market, okay? You shouldn't be trading. And you take the day off and you wait. And there's nothing wrong with that whatsoever. Okay, so lastly, to cap this all off here, guys, what are the algos doing during this time? What do they want you to do during this time? And again, we've talked about this quite often during periods of indecision in the market. Okay, during periods of sentiment that is just kind of without conviction. It's just kind of lacking that aggressiveness. You're going to have stocks that push towards their breakout ranges. And you're going to want to buy those every single time. Case in point, let's take a look at this Google. This Google hit 785 this day. I wanted to buy it here for a move to 800. This thing spiked up to 785 here. Actually went to 787. I wanted to buy here for a move to 800. You get these spike ups every single day, and then today, boom, we ended up right up here at 787. I want to buy this right now for a move to 800. Am I going to get it? Chances are, absolutely not. Chances are, absolutely not. And again, the smart money is out there. All the algos are out there pushing these stocks with very, very light volume. Notice all the volume is extremely, extremely light, especially for the past couple of days. So it's very easy to move stocks, especially stocks like Google, stocks like Priceline. Very easy to move them up and down to get you to buy and pay up for your options premiums. Okay, so you take a look at this Google. She's trading 787. The 790 cost, the 795 cost. They get you to pay, $1.50, $2 for these things, and then boom, you wake up tomorrow and that shit's worth 50 cents. Okay, and these are the kind of games that they play, and these are the kind of games that you need to be cognizant of that are going to happen to you. You will get gamed. Buying a lot of these options, you will get gamed if you don't understand market sentiment. Okay, now guys, you've seen my P&L for the past 2 days. You've seen I haven't done shit. I haven't done a damn thing, and that's not a coincidence. That is not a coincidence. All right, so that kind of wraps up our discussion here of market sentiment here, market psychology. So let's go ahead and field some questions here. I know Charlie has been asking, or I know Charlie has been coming back with a lot of questions here as well. But let's go ahead and just field some questions here. Whatever you guys got, talk to me about market sentiment, market psychology. Did any of that, make sense to you guys? Do you guys watch or do you guys feel for that kind of market sentiment as well? What do you guys? Yeah, that's it. And for me, you guys know how I do it. I just watch this. I watch this. And again, like I'm in the game enough, and I have enough experience to kind of, again, just feel out how my sectors are trading, how my stocks are trading, and that'll give me the idea of what my sentiment still is. So for morning, whether you're talking 15-minute time frames, 10-minute time frames, half an hour time, I don't care what time frame you're looking at, you're still looking for conviction on either side of the trade, okay? And again, I feel like tape has all the answers more so than anything else. I know a lot of you guys are talking about the VIX, or you're talking about gold, or whatever some of the other indicators are. I don't use any of that. I don't use any of that, because for me, it's all about feel. It's all about tape. So if I'll take a look at some of these banks, especially that Goldman Sachs, off the open, and she's spiking the highs, and she's bringing up the rest of the financials as well, then what is my, why would I be short the market? Why would I ever be short the market? Because again, financials have been very strong. They've been bringing this market up for the past couple of days, and you're just watching the correlation between your sectors and what the market is doing. So if all of a sudden your banks are striking higher, they're going higher with conviction, eventually you figure the market's going to follow too, and the market did follow. Okay, so it's a lot about looking at, looking at your sectors, looking at tape, feeling the conviction one way or the other. It's about making theories and then establishing trades on those theories. So, for example, guys, I shorted the market this morning. So take a look at my, these are all my trades here for the day. If you take a look at the done orders, am I even getting them? Doesn't look like I'm getting them. Okay, here we go. So 930 SPY puts right off the open, guys. Right off the open, I bought 150. I bought the 151 and a half puts right off the open, right? And I bought them for 41 cents. I bought them for 42 cents. And then boom, look at what happened. We got a huge spike up off the open. And then of course immediately, like I try to make, I try to take quick losses. So boom, I got out immediately after these things. And then I just kind of sat there and waited. So for me, I test things out. I got things called feeler trades. That's what I use to give me the sentiment, give me the idea on what the market wants to do on that particular day. I will gladly take $1,000 in losers to save me from a $50,000 loss or a $100,000 loss, or to find me the sentiment to make myself $50,000 or $100,000. I will gladly take those losers. That's my game. That is my game, and that's how I that's how I use feelers, and also, sector strength, sector weakness, looking at all these individual stocks to give myself a good idea on what the market is up to for the day. Okay, so that, I hope that answers the question there. Charlie, what else we got? Let's see. Never trade first 15 minutes. Becky is saying, yeah, Becky is saying, do I ever trade the first 15 minutes? Becky, sometimes you have to. Sometimes they make the moves happen in the first 15 minutes, and you kind of have to predict that. So that's going to come with experience and a lot of tape reading. Sometimes you're going to have a gap up or a gap down, and that's when everything is going to get started. You're not going to get another chance to get a better price, and you just got to hop in. Okay, but that comes with experience and a lot of ability doing the tape reading. Justin is saying I made 130% gain on Groupon calls and 100% gain on a 155 call. Justin, you read the market correctly. Attaboy. Sam is saying, how do you use pre-market action to gauge market sentiment? Well, Sam, there's a couple different ways to do that. And again, I mean, this is up to discussion. Personally, I know the pre-markets are very manipulated. I know this because I see it happen all the time. So I'll see them put a 10-point move down in Apple, and then all of a sudden, for the whole day, it is the most bullish stock in the world. And that 10% and that 10-point move down off the pre-markets was a setup to create the bias for all the retail money to think the market, to think it was a short, and to bail on their long-term trades, okay? So if Apple dumps 10 points in the pre-market and you're long, what do you think you're going to do off the open? You're going to sell that shit, and then you're going to look 20 minutes later and say, holy shit, I just got set up. And that's to me is the name of the game with the pre-market. Oftentimes it's a little bit different. Obviously, when there's a whole sector move, like again when they announce QE, guys, and actually, you know what? I'll give you guys a great example. One of my biggest trades for last year, we made about $250,000 on this day right here. This was after the QE. Okay, now I say JP because look at this consolidation that JPM sat through. Okay, You look at all this bullshit, okay? And now you tell me what's the high end of this, okay? 37.5, right? Every time she gets to 37.5, there's a problem, right? There's a problem, okay? And then what does she do? QE got announced. She gaps to 37.5, and then you get a fraction of a second. You get a fraction of a second to get all your contracts, and then boom, there goes your move. You're not going to get anything better than 37.5. So this goes back to Becky's question. Sometimes, guys, you got to be ready to move. You got to be ready to move. Tej is asking, do you have trouble getting fills on large size on your options? Bro, of course. What kind of a question is that? Let's see. Dustin is saying, absolutely. I would think the market top will be when everybody and their mother gives up trying to short. Yep, absolutely. So you're going to have a huge up day. I agree with Dustin completely because, again, I've seen this happen so many times. You're going to have a huge up day. Everybody's buying everything, and that's going to be the top. That is going to be the top, and they're going to reverse it the same day. They're going to reverse it the same damn day. Daly's Creek is asking, Sang, do you think the NASDAQ opening at 4 a.m. now may force SIBO to open options earlier? Dude, that is an awesome question. And actually, I'm in the process of writing an article about the NASDAQ opening at 4 a.m. Frankly, I think this is the worst thing that could happen. I would even like to start a petition against it. But again, nobody listens to me, and there's no way I can stop this from happening. Them starting it at 4 a.m. is going to offer up a lot more manipulation, a lot more potential for manipulation in NASDAQ tech stocks like your Googles, your Pricelines, your Amazons, and all that kind of stuff. That is going to cause a lot of problems. And I think it's starting in March, guys. I'm not sure if it's March or April. But Daily Creek is asking, is it going to force SIBO to open options? Guys, if options open in the pre-markets, we're going to have a whole new game to figure out, okay? So be ready for that. I mean, definitely think about it. Obviously, they're going to be so super illiquid that it's going to be almost futile to even try. But again, there's going to be game there as well. So if they do allow options to open prior to the cash market open at 9:30, there's going to be a lot more game. Okay, but again, yeah, we do have the mini options coming out. So when the mini options come out in March, whatever the hell they're coming out, that's going to be a whole new game too. So be cognizant of market changes as well. That thing at 4 a.m., the NASDAQ opening at 4 a.m., that's a big deal. That is a big deal. And to me, that's going to open the doors up for a lot of market manipulation too. Any other questions here? Any other questions? What else we got? I'm seeing everybody saying send info, so I'm assuming this is all for Charlie. They're just saying, why don't you hold positions overnight? You got to have a certain market for it. And obviously, dude, I mean, you're taking a look at a stock like Goldman Sachs right now. I mean, you look at this thing and you want to slap yourself for not buying this breakout here of 120. I mean, to me, the breakout was whatever. This was 125. So you buy here, and you have a big long-term move. Now, nobody's saying anything against that. And again, it has to do with your account size. It has to do with your strategy. So again, like for me, I know what works for me in the short term. I know that for me, I'm going to my goal right now is to build capital. Okay, that's what I'm in the market for right now. When my account gets to the point where I can relax a little bit and take a little bit more on the swing trade side, and I can, let's say, bet on, let's say, a 2-week, 3-week, or a month-long move in the market and get a big picture breakout on stocks like Goldman Sachs and whatever, that's great. That's great. Then I'm going to do that, So again, there's a time and place for every single one of these strategies, okay? And Tej, in the interest of not trying to, again, do too much, I cannot, me personally, I know myself. Like, I can't handle 3 different strategies at one time, okay? You want to know what happens? If I'm focusing on swing trading, and I'm doing intraday trading at the same time, I'm going to take an intraday trade that's supposed to be an intraday trade, and all of a sudden it turns into a fucking swing trade because I'm thinking, oh shit, I should swing this thing, and 2 weeks from now I'll be fine. Okay, the mentality is different. Okay, and again, this goes back to the psychology of trading. It's very complicated to do several different types of strategies at the same time because the mentality conflicts with each other. You have to have one type of mentality for a swing trade, and you have to have another for intraday trades. And then if you're going to swing trade options, that's a whole different beast in and of itself, okay, versus swing trading equities. Now you got to pick. Now you got to pick the right strikes. You got to pick, how many months you want to give it. You got to pick, if it's something too expensive or not. There's a lot of other stuff that goes in with it. So right now, I am building capital with my scalp intraday strategy. Once I have enough, I feel enough capital, then I will go ahead and move, towards a more swing approach. I'll try to do both at the same time. I'll also try to do a lot of writing and things like that. So it's all a process for me. And again, you have to choose the right strategy for your mentality, your personality right now, okay? That's the whole game. Tyler's saying, how are your Tetra skills? Bro, talk to the Asian, man. That's all that kid does. Tony is saying, how many equities, indexes, FX do you monitor and understand to make profits? Dude, this is my watch list. This is it. This is it. This is all I need. Actually, I only even trade like 4 or 5 of these things. So right now I trade Google, the Goldmans, and that's it. Alex is saying, what the fuck is the Harlem Shake? Dude, dude, Bad Boy came out with that shake, man. I mean, that was the dance that swept the nation, bro. Let's see. Igor is saying that list should be called Juice. Yes, absolutely. Eric is saying, do you cover what writing is in the class? Writing is a more advanced strategy for people with larger account sizes, okay? So again, like if you're trying to do spread trading or you're trying to write naked calls or puts and all that kind of stuff, you need a sizable account to do it correctly, okay? So we do cover what it is, and we do cover what the strategy is and how to make money off of it. But again, a lot of retail guys cannot take advantage of that strategy that well because your account sizes are not that big. Point blank. EL saying, where are you located? I am in New York, bro. Anything else? Anything else? Again, market psychology, guys. Start understanding, start learning, start feeling the sentiment of the markets. If you don't have a good idea of what the sentiment is on a daily basis, on a weekly basis, on a monthly basis, doesn't matter what time frames, you are going to end up making some shitty decisions. G is saying, sorry. Yes. Yes. Igor is saying, does time and sales in weeklies tell you anything? Yes, absolutely. You're talking about options. So if you look at the tape in an option, is that what you're talking about, Igor? Yes, no, maybe. Oh yeah, absolutely, dude. Absolutely. You can pick up some aggressive buyers on some of the weekly options. Dude, I'll get you. You want to know a great example? Oh shit, I got something for you. So that Citigroup trade, you got a Citi Bank of America trade a couple days ago, and I was bitching and moaning on Twitter that I didn't make enough. Let's see. So this happened right off the open at 43, and guys, look at how big 43 and a quarter was for Citigroup. She gapped up. She gapped up at 43 and a quarter, sold off like 20, 30 cents, and then just ripped a point in seconds. Okay, this actually happened in about 10 minutes. Right before I started buying, guys, there was somebody who bought 3,000 contracts of the 44 weekly call, okay? And they bought that shit way cheaper than I did, way cheaper than I did. And they bought 3,000 flat, 3,000, one order. And dude, that's unbelievable. Okay, that means there's a super souped up version of me out there. That means there's somebody else as crazy as me and as good as me and even better than me. Okay, so yes, you can pick up tons of shit on those weekly options. If you're looking at the time and sales. Becky is saying, do you mainly do weeklies? What strikes do you pick typically? How do you pick them? Small bid and ask spreads. Becky, that's like 19 questions in one, darling. Yes, we mainly do weeklies for now because, again, I'm looking for those intraday moves. What strikes do I pick? Whatever looks good. How do you pick them? That's the whole thing. That's a whole class actually. Small bid and ask spreads. It depends, Becky. I'll play them all. If you're a retail person that doesn't really have that much experience trading stocks like Priceline, yeah, I would say stick to names with a small bid and ask. Meaning a small spread like 1 or 2 cents, or like Facebook being the max at like 5 cents. But Priceline, you're dealing with spreads of like 50 cents to 60 cents. So you better know what the hell you're doing if you're going to play those. All right, I think that's it. Charlie, anything else here? Okay, do it. Indeed. All right, yeah, that's it, guys. Enjoy your evenings, and we'll see you for the next one. We'll probably churn out a couple more next week. But yeah, I hope to see you guys in the classroom as well. All right, have a good night, guys.